Hello everyone. Welcome to the Stock Minds web channel. Real Brokerage, NASDAQ REAX, has captured attention with its explosive growth and attractive valuation in Q1 2025. The company surged in key metrics, from revenue and earnings per share (EPS) to free cash flow, while maintaining a lean balance sheet with no debt. With analysts forecasting continued momentum and a high upside from current levels, REAX is emerging as both a growth story and value play in the real estate tech space. In this video, we will dive into Real Brokerage recent earnings, stock performance and valuation, growth potential, and the risks investors should consider. About Real Brokerage. Founded in 2014, Real Brokerage is a technology-driven real estate brokerage operating across the US and Canada. The company empowers agents with a cloud-based platform, AI tools, and integrated services including title, mortgage, and fintech via its Real Wallet feature. Headquartered in Miami, Florida, REAX stands out by blending agent expertise with software innovation, facilitating seamless transactions and scalable growth. Real Brokerage financial performance. In Q1 2025, Real Brokerage delivered strong financial performance that underscores its rapid growth and improving efficiency. The company reported quarterly revenue of $353.98 million, representing a significant 76.33% increase compared to $200.74 million in Q1 2024. Its earnings per share (EPS) also showed substantial improvement, with a reduced net loss of -2 down from -9 a year earlier, a 77.78% reduction in losses. On a trailing 12 months TTM basis, revenue rose 81.3%, reaching $1.42 billion compared to $782.06 million the previous year. TTM EPS improved from -20 to -8, marking a 60% decrease in net loss, while free cash flow per share TTM grew 23.53% from 17 cents to 21 cents. Despite still operating at a net loss, Real Brokerage maintains a gross profit margin of 9.02%, a net profit margin of -1.09%, and a free cash flow margin of 2.96%, demonstrating progress toward profitability. Return on assets is -10%, and return on equity is -53.24%. The company operates with no debt, posting a debt-to-equity ratio of 0. Over the past 5 years, Real Brokerage's revenue has been growing at a 185% CAGR. Net income is still negative, but free cash flow has also been growing rapidly. Real Brokerage Fiscal 2025 Financial Forecast. Looking forward, analysts forecast 2025 revenue of $1.81 billion, a 43.4% increase from the $1.26 billion in 2024, and project EPS of -1 an improvement of 92.86% from -14 Analysts give strong buy rating with a price target of $6, giving a potential upside of 51.52% from its current levels. REAX stock price performance and valuation. At the time this video was created, Real Brokerage's stock was trading at $3.96 per share, reflecting a 2.8% increase over the past year, underperformed the S&P 500's 8.9% gain in the same period. But since its public listing in June 2020, the stock has surged 874.4%, significantly outpacing the S&P 500's 99.1% gain over that time. From a valuation standpoint, Real Brokerage remains attractively priced. It currently trades at a price-to-sales PS ratio of 0.55, with a forward PS of just 0.43. Additionally, the stock's price-to-free cash flow PFCF ratio of 19.46 is reasonable given its strong revenue expansion and improving cash flow metrics. Based on Fiscal.ai data, if we look at the valuation since 2023, Real Brokerage's forward PS and free cash flow are below the average. This potentially indicates undervaluation, as Real Brokerage is still growing its revenue and free cash flow rapidly. These valuation multiples suggest that despite the company's significant growth and operational improvements, the market has not yet fully priced in its long-term potential, making REAX an appealing opportunity for value-conscious growth investors. Real Brokerage growth potential. Real Brokerage growth prospect remains strong, driven by several factors. 1. Strong operational growth metrics. Real Brokerage experienced strong operational growth in Q1 2025 despite a challenging real estate market. The total agent count surged 61% year-over-year to 26,870 by the end of the quarter, further increasing to 27,700 by early May 2025. Transaction volume rose 77%, with 33,617 closed transactions compared to 19,032 in Q1 2024. The total value of these transactions reached $13.5 billion, an 80% increase from $7.5 billion a year earlier. Agent productivity improved by 7%, contributing to overall transaction growth. Additionally, the company maintained a low agent churn rate of 8.7%, reflecting strong agent satisfaction with its platform. This robust expansion is notable given that existing home sales in the broader market declined 2% year-over-year, underscoring Real Brokerage's resilience and competitive positioning. 2. AI-powered tools innovation. Real Brokerage is advancing its AI capabilities with Leo Copilot, an AI-powered assistant that acts as a command center for agents. It automates administrative tasks, document reviews, and client communications, helping agents focus on high-value activities and boosting productivity. Since April 2025, all inbound agent support calls are routed through Leo, enhancing response times and operational efficiency. Leo Copilot integrates with Real's proprietary platform, Rezen, and proactively creates personalized marketing content and training resources. Looking ahead, Real plans to launch Leo for Clients in 2025, enabling direct client-agent communication via SMS and iMessage. This will automate routine inquiries, improve client experience, reduce costs, and allow agents to concentrate on strategic relationship building, further transforming how Real agents operate and interact with clients. 3. Vast market opportunity. Real Brokerage operates in a vast addressable market, with the U.S. residential real estate sector generating about $100 billion annually in brokerage commissions from nearly 2 million agents. Including ancillary services like mortgage, title, and escrow, the total market opportunity exceeds $215 billion. Despite rapid growth, Real Brokerage currently holds less than 2% of the total real estate agent market, signaling significant room for expansion. The company is also exploring international markets beyond its U.S. and Canadian operations. Management remains focused on driving growth above market rates and improving margins through disciplined capital allocation. Its technology-driven model, expanding agent base of around 27,000, and growing ancillary services position Real Brokerage well to capture a larger share of this extensive market opportunity. Risks to consider. While Real Brokerage looks like a compelling stock, we should be mindful of potential risk. 1. Sustained losses and profitability challenges. Despite strong revenue growth, 76% year-over-year to $354 million in Q1 2025, REAX reported a net loss of $5 million in the same quarter. While this is an improvement from a $16.1 million loss in Q1 2024, ongoing losses and a negative EBITDA margin, minus 1.15%, indicate profitability challenges, especially if growth initiatives like AI platforms, for example Leo for Copilot, or expansion into ancillary services like fintech, do not yield expected returns. 2. Dependence on housing market trends. REAX's performance is closely tied to the health of the real estate market in the United States and Canada. Persistently high mortgage rates, affordability challenges, and macroeconomic factors could reduce home sales, negatively impacting transaction volumes and revenue. For instance, 48% of agents in a March 2025 survey cited affordability as the biggest buyer challenge, and 25% noted significant macroeconomic impacts on client behavior. 3. Intense competition. The real estate brokerage industry is highly competitive, with REAX facing rivals like Redfin, eXp Realty, and Compass. The company's technology-driven model and low-cost structure are advantages, but competitors with larger market shares or more established brands could limit REAX's growth or force it to lower fees, impacting profitability. Conclusion: Real Brokerage stands out as a compelling investment opportunity, offering a rare combination of high growth and attractive valuation. Despite being unprofitable for now, the company is narrowing losses and generating positive free cash flow, which is key signs of operational maturity. While there are risks to monitor, such as macroeconomic headwinds and execution challenges, the long-term growth trajectory and improving fundamentals make Real Brokerage a stock worth considering for investors seeking exposure to innovation in the real estate sector. But remember, this is not a financial advice. What do you think about Real Brokerage? Are you buying, holding, or passing? Drop your thoughts in the comments below. If you found this video helpful, please make sure to like, subscribe, and hit the bell so you don't miss my next stock analysis. Thanks for watching and see you in the next one.